Hey, what's going on, team? It's Ricky with Tactical Solutions. Hope that you guys are all having an amazing Sunday. And let's go ahead and talk about what's going on right now. Just want to make sure that I can pull this up right now. So we got the Nasdaq market is now trading below 11,000. So for all the people that are shorting the market, for all of our bears out there, it looks like if the market were to open right now, you would definitely be in the green, right? So we just broke below 11,000. We could see that when we broke below 11,000, there was a huge red candle, just obviously breaking below a significant support level. And right now we're holding right around 10,900 for the Nasdaq Futures. So what's up? What's going on, guys? Just wanted to make sure that we quickly talk about some of the stocks that you guys see value in. Overall, long term, right? As market direction is not in our favor, it's probably not going to be in our best interest to try to force an entry or a day trade when simply conditions are not favorable for us, right? For those that are okay with short selling, for those that trade options and are okay with buying puts, then, it looks like the market's going to be right up your alley. But when it comes down to those that are, that don't want to short sell, or for those that don't want to buy puts, then maybe staying cash or just watching your position size is probably going to be in your best interest, right? At least as of right now, that's what it looks like. The Nasdaq market again is down almost 1.1%. During these extended hours. And again, the Nasdaq market's at 10,900 a share. So please make sure that you guys are aware of that. So, all right, here we go. Let's go ahead and just jump right to it. Yeah, so long or short right now, the overall market is definitely, it would pay if you were short, based off of how it looks right now. But Nasdaq Futures, again, one of the things that we've noticed from time to time, they're always all over the place. Right now, they can be in the red, but by the time the market opens tomorrow, which should be in about 12 hours and 30 minutes from now, maybe it will be in the green, right? Or maybe it will be even deeper in the red. So there's no right or wrong, right? That's not the point of these Sunday stock talks. The Sunday stock talks are kind of just to kind of prepare for the week as a team, and to be aware of what's currently happening with the Nasdaq market and overall markets, right? I wanted to make sure that we talk about a series of different, speeches that are set in place for this upcoming week. So again, make sure that for your federalreserve.gov calendar, that you guys update it, that it's no longer in September, and that hopefully now it pops up in October, right? So Monday seems like a pretty slow day. On Tuesday, we do have a speech right around 11:45 a.m. This is going to be about 2 hours and 15 minutes after the stock market opens, so 11:45 a.m. Eastern time. And then on Thursday, we have another speech at 1 p.m. And again, this is going to be all provided for you guys at the federalreserve.gov website. And then there's a speech, an economic outlook at 5 p.m. Eastern time, which should be around 2 p.m. Mountain Standard Time or Pacific time. So let's make sure that we are aware of that. And then if you're part of my Learn Plan Profit group, I'll keep you guys up to date during our live trading session tomorrow about this series of economic reports that are put in place for this upcoming week. Does that sound good? So emergency, oh yeah, I did hear about that. It's an emergency meeting tomorrow, but it's a closed meeting, right? So it's not a meeting that they're going to have to talk about right away. So there is an emergency meeting tomorrow for the Federal Reserve, but that's going to be closed, and it's pretty much just private. So not really something that we're going to be able to tune into really as of right now. So let's go ahead and just start breaking down these series of different stocks. One of the things that I quickly wanted to talk about is, especially easily being able to see how the Nasdaq market is right now. The Nasdaq market, again, trading below 10,900 a share, right? Or not a share, my apologies. Just these are Nasdaq futures. So 10,900, it's down nearly 1.2% now. This means that SQQQ would be up over 3%, and TQQQ would be down over 3%. So right now we had previous lows of 267, my apologies, for QQQ. And based off of current levels, right, at the negative 1.1%, we would definitely be surpassing those lows for QQQ. So Let's go ahead and just jump right into it. So let's go ahead and break these different stocks down. So looks like someone wants me to break down Wingstop. Wingstop, okay, I'm going to go on the overall day chart, right? Based on, wow, it's surprised me that it's performing better than I expected. So it looks like Wingstop hit highs of 179, hit overall lows of 75. This is almost a perfect example, right, for all of our Learn Plan Profit members. This is a perfect example of the three stages of a reversal. There's the rejection phase, the consolidation phase, and then when we break above the EMA, this is a confirmation stage. So this is as perfect as it can really get in the real market. We can see the higher highs and higher lows here. It's been validating the moving average and the EMA as a support, so that's really nice to see. It's showing signs of a support level, but again, anything can happen, especially with these markets being this uncertain, right? So if I were you, and if I got in at these lower price levels and then I see that it's beginning to break the potential support, if it breaks below 117 or 116 around that area, I would reduce my position size there and get ready for a potential pullback down to previous lows. If it continues to hold up here and show signs of a support, then we can possibly be making our way to new highs based off of recent patterns. But again, right now, I would call this to be a critical point where it's showing signs of a potential support level. But if it breaks below this, then again, that's a break-if pattern, and that would mean that I no longer want to be in that position. So let's go ahead and go on to the next one. So we got Viren with SPY. So SPY is going to be very similar to QQQ, which is SPY is the S&P 500 bull ETF, right? I know that the S&P 500 market is down right now. S&P 500 futures are down. So that means that you're most likely going to be in the red as well. So, I think it's very simple. And I'm not here to overcomplicate things for any of you guys. If your intention is to try to make money right now, I would not be trying to trade SPY. It just doesn't make sense. Market direction, market sentiment is not in your favor. If you're trying to make money right now, it just doesn't make sense. All factors are against you. If you're trying to make money in the future and you're trying to prepare now, right? Then yeah, I think SPY could be a good ETF to consider, especially if you really do value the S&P 500. But it's all about your intention, and a lot of that has to do with your position size as well, right? If you're trying to make money right now, I would stay away. If you're someone that can tolerate the time that it will take for the S&P 500 market to recover, then yes, I think that this could be a great ETF to look into. Doesn't mean that it can't go lower. That's not what I'm saying. It means that it's at a great price and based off of previous highs. And as they say, markets always end up recovering. The simple question you should ask yourself is, can you tolerate the time that it will take for the markets to recover? So, I think we should be solid on that. And again, if it's not too much to ask, I 100% understand. I guess if you can't, but if you guys can drop a thumbs up, I would really appreciate it, as it most likely YouTube can alert other people that we are live as well. So there goes negative 1.3% on the day. This is for the Nasdaq Futures. Nasdaq Futures are still dropping, so please be very careful with your position size. The cheap can get cheaper. So again, right now, all I'm trying to do is break down your top stock. So please, as of right now, I'm not really trying to answer any questions. I'm really just trying to focus on breaking down some of the stocks you might be seeing value in. So yeah, one of the things that we have been noticing is that oil prices are going up, right? So we saw a really nice pullback previously to lows of 367. We hit highs of around 765. We pulled on back to the moving average, and now it's showing signs of this potential reversal, right? Sold off, showing signs of a support. Now it's trying to break above this level, and I would say that if it breaks above 6, then again, that would be the level where I'd be like, okay, we are on our way to try to retest 7 or 7.5. But if we get rejected here, as long as we continue to trade below 6, I would say that we're overbought. We're overbought. This thing can pull on back to the moving average, and there's decent downside, right? But if we break above and it begins to indicate signs of an uptrend, then again, that's a break of resistance. It's now indicating signs of an uptrend and something that we can follow up with. So this would be something where it's like, hey, if you're trying to make money right now, and we break above 6, it could be pretty lucrative, right? But if you're trying to make money long term, oil is pretty overvalued as of right now, in my opinion, right? So Let's go ahead and do Carnival Cruise Line. So we haven't done that one in a while. I appreciate you taking time and joining us for our Sunday stock talk. So, wow, we are below pandemic lows. Jesus. Down 20. There has to be something that was announced on Friday. That is too significant of a drop for it just to be random. 23% loss on the day on Friday alone. I mean, this just really screams like, sell. The cheap can always get cheaper. It's now at $7. It was previously at highs of $30. And then before that, it was at highs of $50? So if, again, you're trying to make money right now, probably wouldn't make sense. But again, once it begins to establish signs of a support level, you have to understand that there's stages of these things, right? It sells off, sells off, sells off, and then it begins to show signs of a support, and then it begins to indicate signs of an uptrend. So right now, we're in that rejection phase, and I think that it would be too risky to try to jump into it as of right now. It's just too risky. So let's go ahead and break down that one. That's going to be American Airlines. Let's see where this one's at. American Airlines right now is at $12 a share based off of previous lows. We are testing a support level. I normally like to swing trade American Airlines anytime that it's around that $12 price point, but the market is very bearish right now, which could simply just act as a further negative catalyst for the overall market. So I would be very careful if you're someone that maybe is not the best with position size or risk management. I would just stay away from American Airlines. I view it to be a fun stock to trade from time to time, but let's keep it real, right? I mean, it's getting rejected by the moving average. It's making lower highs and lower lows, and simply direction is not in your favor. So again, if you're trying to just get into the stock market and you're trying to make things easier for you, then maybe avoid stocks that are showing signs of strong descending patterns. But then you might be like, well, Ricky, everything is selling off. Well, yeah, I mean, now is a great time to prepare, but preparing does not mean that you proactively have to buy the dip, right? It just means that, if I were to ask you a very simple question, if you were to only pick 3 stocks to buy and hold right now, what would they be? Where would you buy them? How much of it would you buy? When would you buy more, right? It's asking those little questions so you can at least answer those questions now. So once the opportunity does present itself, you're micro-focused on your 3 main stocks, right? I think the worst thing that you can do right now is be, super adamant about, well, I'm just going to take advantage of any opportunity. And then when all the stocks begin to recover, then you're going to be overwhelmed, right? Just keep it simple. Who cares what it is I'm investing in? Who cares what other people's investing in? I'm asking you, right? What stocks would you not mind investing in long term that you would like to buy the dip on once they begin to indicate signs of recovery? So what do you think about CCL, cheapest since 1993? Yeah, we just broke down Carnival Cruise Line. So, the cheap can get cheaper. So I think it's very oversold, but selling pressure is very high, and that 23% sell-off is too relevant where I think that it can continue to sell off. I think it's too risky to try to find the bottom of that stock right now. I would rather be someone that allows it to sell off. You can set alerts, and that indication of a recovery, then you can choose to take action, right? It's not about trying to be into it when it's actively selling off, but when it's indicating signs of an uptrend. So DRV. I did see that. So DRV is the ETF that pretty much shorts the real estate market, something like that, right? I was learning a little bit more about this. Yep. So hitting highs of 70. I obviously think it's very overvalued as of right now based off of recent patterns, but this is how it tends to trade. So, and I mean this in a very respectful way. You just have to understand that anytime something pushes up this quick, it's gonna correct itself. It's going to. It's not an if. It's going to. Like, it's a when, right? It's gonna pull back, and then it could rally again, and then it pulls back, and then it rallies a little bit, and then it pulls back, and then it has this very strong rally. I think there was a popular YouTuber, right, that made a video on this. And it's most likely going to pull back. And this time, because of this overreaction, now it could pull back a lot harder, right? So yeah, it might, again, it's very simple. I like to keep things as simple as possible. What is your potential upside for your potential downside? Do you think that we have More upside potential or more downside risk? I think it's a very simple answer. I think downside risk outweighs, yeah, we might be able to hit 75. We might be able to hit 80. You're right, right? It could still gap up, directions in your favor. But at what risk does this come at? If you don't swing trade it, then I guess it doesn't matter if you're good at managing your risk. But I would be very, very careful with getting too confident and too comfortable with these overreactions to some degree. And I do believe, this one is shorting. It's a bear ETF based off of the real estate market. And I think that, yeah, no question, we should have definitely gone up. Do I think that we should have gone up this much? Again, I just think that a correction will eventually happen. And are you someone that is disciplined enough to hold yourself accountable, lock in profits, and not take part of riding it all the way back down? My goal for all of you guys is to keep some of the profits that you guys make. And the best way in doing so is for you to be able to answer a very simple question. Anytime that you're up or down on a position, ask yourself, is the risk worth the reward? And if the answer is no, then just don't do it. That's all. I have no special strategy. It's literally just using common sense. A lot of downside risk. Yeah, there's some potential, but a lot of downside risk, right? So, but again, you're an adult. You can do whatever it is that you want. And I wish you guys nothing but the best. But again, my main focus is always to take downside risk into consideration. All right. Let's go ahead and break that down. So Salt Life 1717. Let's go ahead and break down wheat. All right. So we have a wheat ETF. You guys are coming to us with those fancy ETFs. Okay. So overall was very bullish, became very overbought, sold off very aggressively, right? Just like anything, it pushes up, but after a while it becomes overvalued. And as quickly as it pushed up, and as much as it pushed up, it will drop even harder, right? This happens literally every single time. Now it's showing signs of a support, 3 stages of a reversal, rejection, consolidation. Now it's showing signs of potential confirmation. Now, if we break back below EMA, I would call that a break of pattern, and I would get out of that. But if we begin to indicate signs of an uptrend and make some higher highs, then again, I see that upside potential, so I can see why it's something that you would pay attention to. So I like it. I like the potential of the upside risk versus the downside risk. The risk to reward ratios are more favorable in this. And I like how it used to trade before. It has history where it's been a good performing ETF. And I think that says a lot about, that you're trying to put yourself in a position where conditions are more favorable for you. And I think that's great long term, right? All right, let's go ahead and break down DS. So thank you for breaking down DRV. Have a good night, brother. What's going on, Umar? I'll see you at Market Open. We'll see you for our live trading session. Thank you again for tuning on in, homeboy. All right. So where is it? I think you said it was DS, right? I do not trade penny stocks. I do not trade lower cap stocks. I think you said it's something like Topgolf, right? Well, it's not performing very well, right? Lower highs, lower lows. I think it's very easy to see that if you're hoping for a nice little rally, that's fine if that's what you hope for. I'm not here to trade based off of hope. I'm not here to hopefully get lucky, right? We know that from time to time it does pop off. I would rather just set alerts, and if it pops off, then you can choose to take action instead of just buying the dip and fingers crossed, hoping that it recovers, right? It's very easy to see that direction is not in your favor. It's very easy to see that it's been selling off for a long period of time. So again, do not put yourself in a position that you cannot tolerate. And if you buy when the stock is still selling off, then you have to expect that you're going to lose money most likely. So let's just make sure that you are aware of that. Let's go ahead and break down Rivion. So remind me of the ticker because you're spelling it out. Rivion is RIVN, right? Yeah. Okay. There it goes. Rivion stock back at where it belongs. $30 a share. Just kidding. I'm totally kidding. Obviously, I'm a Tesla fan, but I have seen some of these Rivion trucks around my area. I don't know if you guys have seen them. I've probably seen more Rivion trucks than any other EV competitor, at least in my area. ENPH. What's going on, Corey? I appreciate that. I'll break it down right after this, okay? All right. We got Jeffrey with Adobe. Give me one quick second, guys. But yeah, I think that it's very oversold. I think Rivion has a lot to prove. But I mean, again, just being very realistic. If Tesla's struggling and if Tesla is years ahead of this, right? I think it's going to take a lot for Rivion to even compete with Tesla, yet alone just making, right? It has to become profitable at that point. So I think it's something worth looking into. I think it's oversold. I think it's worth setting alerts on. And if it begins to indicate signs of recovery, let's just leave it at that. If the opportunity presents itself, great. I want it to prove itself to me that it's making other people money. At that point, I think that it could be worth a chance to, entertain the idea of potentially investing if direction is in my favor. But until then, I'm not going to really entertain it. ENPH, again, the cheap can always get cheaper, allow it to sell off. So ENPH, a little bit more on the overbought side, right? So it's very easy to see overall direction. I think it's great that you're focusing your time and your attention in something that is still bullish. And obviously energy is very bullish. Right now we are testing support levels and it looks like it's been here since, what is that? Late July. It popped off late July. It's been showing signs of a support, but again, a huge gap down. So if it breaks the support, again, this could be a big short position. But again, if it finds its support, then yeah, we could rally maybe a little bit more, right? But one thing I just want you to take into consideration is what's your upside risk, upside potential versus your downside risk. And I think you could answer it for me that I don't think it's worth it, right? It's very close to that support. It's been trading up here for quite some time and there hasn't been much progression. And because of that, I think that's only just, signaling that we're getting ready to pull on back. So we got Adobe. What is that? ADB? No. What's Adobe, Jeffrey? ADBE. All right. Let's go ahead and see what we have next. We got ADBE. Alrighty. So Adobe has been struggling on the day chart. It's been selling off since late 2021. Yeah, I can't say anything for this. It went from highs of nearly $700 a share to current lows of $275. It's lost 60% of its value. And this is a perfect example. Anytime that you try to predict a stock support or its bottom, this is a great example of where the cheap can always get cheaper. It was cheap a month ago at 350, but even from 350, it has now gapped down once again. The cheap can always get cheaper. Keep investing simple. Allow direction to be in your favor. I need this thing to break above the moving average. I need this thing to indicate signs of an uptrend. I need this thing to make higher highs and higher lows. Until then, it's not worth the risk. I'm not saying that Adobe is a bad company. It's just based off of its past year's performance. It's not worth the risk for me, right? And to each their own. So let's go ahead and break down the next few. We got PTON. All right, what's up? Appreciate you tuning on in. Hopefully we earn your thumbs up. Yeah, check that out. I think PTON is another great example of a pandemic stock that did very well during pandemic conditions. Hit highs of 171 where demand peaked, and now it's trading at $7 a share, $6.93 to be exact. The cheap can always get cheaper. Set your alerts for what it's worth, but as of right now, I have no intention to want to invest anything more into PTON. It's just overall direction is not in your favor. This would be almost considered a Hail Mary type of stock where you would just buy some for the sake of what if it does recover, right? If you put in $100 and then for some apparent reason it just takes off and maybe you can make 1,000% return. But other than that, I would be very careful with how much it is that you buy. This thing looks like it's pretty much teeter-tottering in between the idea of potentially getting delisted because of how bearish it's been for the past year. So I would just be very, very careful with that. So what's going on, Corey? I appreciate that, man. Thank you. Thank you again for your time, and thank you for tuning on in. So we got Mullen stock. Let's go ahead and break that down. Mullen. All right, another penny stock. I'm not a fan of these. the cheap can get cheaper. I think that, again, by trying to find the bottom of something like this, all you're really trying to do is hope that you get lucky that this thing takes off. Again, I view this as like a Hail Mary type of approach. I have nothing against you if this is how you choose to trade. My focus is consistency. My focus is not hoping for something, but allowing an opportunity to present itself. And because of that, I just have to say that Mullen is just too risky for me. It is everything that I don't need something to be. It's bearish, it's consistently selling off, and it's trading below $5 a share, right? Red flag, red flag, red flag. So hey, yesterday I was trying to buy the course, but I couldn't. I don't know why. I tried all the payment methods. What's going on, Tara? I see your message, Tara. We had a lot of messages yesterday. I do apologize for that. I don't know if it's because we updated the course. So we just did a nice little update. We added a new shorting section, and then we added 2 new videos in the ETF section for Learn, Plan, Profit 2.0. So it should be in this video or in this live stream. You guys can refresh it if you do not see it, but it's the second link in the description of this video. It's $150 off. It's the biggest sale that we offer. You can use different browsers if the one that you're using doesn't work, but you should be able to sign up. We had a couple members that we helped get all situated within our Discord. So I know it is working. It just might be the browser that you are using. So right now, again, it is $150 off. It's the biggest discount that we offer for Learn, Plan, Profit 2.0. And yes, that is to also be able to watch me trade live every day. So it's a one-time payment. It's lifetime access. And right now, it's $150 off. And it's the second link in the description of this video. And if you sign up today, then you can watch me trade live as soon as tomorrow at market open. Just want to make sure that you're aware of that. So let's go ahead and do 2 more breakdowns, and then we will call it a live stream. I actually think we've broken down more than that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah, let's do 2 more. How about 2 more? Yeah, let's end it at 16. So I like Ronaldo because you put it in a ticker call out format, and I like Victor. So NBIX. Here we go. Alrighty, trading at 106 a share. This one's kind of like this horizontal pattern, right? If you're part of Learn, Plan, Profit, we talk about these horizontal patterns all the time. Very easy to see the low points, very easy to see the high points. You can set an alert, but based off of recent patterns, it looks like almost every single time right around 105 to 110. It is at a resistance, which makes it more of a sell. You can set an alert just in case it does break above, but because of that, I would be more inclined to sell here in preparation for a pullback to buy more at these lower levels. Again, risk to reward ratios. You want to make sure that when you buy that the odds are in your favor, that yeah, you might take a loss, but that the reward outweighed that potential loss. So let's make sure that you are aware of that. So now Victor's with AVGO. I'll break down another one, AVGO. So again, if you want me to break down your stock, drop a thumbs up on this video. So we have about 1,000 of you, but we only have 274 likes. I thought we can get to at least 500 likes. Maybe that's just me. So AVGO, I love how it used to trade. It was right up until middle of this year where it began to actually shift its overall direction. So I actually really like this. So I'm going to add this to my oversold stock watch list. And that's kind of the goal, right? We've broken down a bunch of different stocks, but the goal is not to see value in all of them. The goal is to cherry pick the ones that you see the most value in, right? So super bullish. I love that about this stock. It was previously trading at highs of 662, but right now it's at 440. Remember, we're not here to predict the bottom of a stock because the cheap can always get cheaper, but it's waiting for indication of a reversal. So all I'm going to do here is just set my alerts. I'm going to set an alert for the break above. I'm going to set an alert for the break below. The more it sells off, the cheaper I can get it, so I welcome it. Allow it to sell off. Don't force an entry, especially when obviously direction is not in your favor, right? So let's make sure that we are aware of that. All righty. Let's go ahead and break down one more. We almost hit 500 likes. Close, but no cigar. All right, let's go ahead and break down one more. All righty, what's going on, Anthony? What's going on, Eddie? What's up, what's up? What's up, Eric? Sound Central. There we go. A little bit closer, yep. All right, let's break down JDST and then I'll do another one. Let me do JDST and then I'll do another one on top of that. We're going through them pretty quick, so I'm glad that I was able to do this with you guys. JDST, it's not looking too good based off of recent patterns. So I know JDST and then JNEG, right? JDST very oversold, no indication of a reversal. I'd be very careful with trading something like this. The cheap can always get cheaper, especially when these go through a series of different reverse stock splits. Maybe you can set an alert for the break above $15, but I just wouldn't risk it with something that's been decaying for such a long period of time. Again, it's all about what you're comfortable with. And if you're not the best with risk management, if you're not the best at holding yourself accountable, then don't put yourself in a position where you're just set to fail, right? Especially when conditions are not favorable for you. So let's go ahead and do one more. So we got Eric with HYLN. Again, Eric, I hope that it earned your thumbs up. Lower lows, lower highs, strong descending pattern. We can't end it with this one. No, this one's absolutely horrible. Again, this one was a glorified stock. I remember this. Glorified stock hit highs of $58. Now it's trading at $2.80. Another perfect example of the cheap can get cheaper. Don't overcomplicate it. Set your alerts. If an opportunity does present itself, great. But until then, I do not care, right? Set these alerts. Wait for the higher highs. Stop trying to find the bottom of a specific stock. Alrighty. So we already broke down SPY, just making sure that you are aware. So, all right, let's see. What are we going to break down? Almost at 500 likes. We have 1,000 of you guys here and we couldn't hit 500 likes. I'm a little sad. All right. Let's see, PLUG. This one better be a good performing one. PLUG. It was a good performing one. Did very well during pandemic conditions. Sold off. Lower highs, lower lows. Direction's not in your favor. Yeah, we're not going to end it with that one. I would stay away from this one. I mean, if you want to lose money, it looks like this one's a great one that's been losing value ever since late 2021. So direction's not in your favor. There's no reason to overcomplicate it. It's not favorable for you, right? If you choose to buy, you're just hoping to get lucky and hoping that all of a sudden it begins to recover. So PLTR, I know that one's really bad right now. I'm not going to break down that one. We already broke down wheat. All right. Which one are we doing? 475 likes. Only 15 more people need to drop a like, and that's all. So ABBV. Okay, this one's actually not bad. We'll end it with this one. So ABBV. I love how consistent it's been, even based off of recent patterns. It's been pretty horrible, right? It looks like now there's a potential break of pattern. So this just means that we have to set our alerts. So it's a little bit more on the oversold side based off of recent patterns. It hit highs of 172. This just means that you set your alert. If it begins to indicate signs of reversal, then again, you can choose to get back in. And if not, allow this thing to sell off, right? Overall direction has been in your favor for the past year. And I think, again, if you continue to choose to try to only put your money in stocks that show history of continuous growth, then you're more likely just to make it easier on yourself. It's still not easy. There's still emotions that come with it. You're still going to make mistakes along the way, but at least you're controlling the conditions and what you really expose yourself to, right? Anytime that you go into a stock that's continuously making lower lows and lower highs, you're just simply making it more complicated and more challenging for yourself. Now, I agree that there's a handful of stocks, blue chip companies, that are making lower lows and lower highs right now. This just means that we have to be very selective with our position size, especially as the market continues to sell off. Let's go ahead and see where the Nasdaq. A nice push on the Nasdaq Futures. So we were down 1.3% at one point for the Nasdaq Futures, and right now we're down less than 1%. So it's not looking horrible, but it's looking red, and we have to respect that. You guys know that I'm a bull, especially right now. I think right now, and I mean this, even if you're a bear, you have to agree, right? I guess you don't have to, but respectfully, I respect bears and what they're trying to do right now. They're making money as the market sells off. That's admirable. That's respectful. I will never try to bring other people down for them trying to make money, right? I think it's great. They're taking advantage of an opportunity, and that's the whole point of the stock market and trading itself. Great. But I think that it's also very naive to think that, I hope that those that are shorting are quick to pivot once the market does begin to recover. Because I know that looking back, maybe 4 or 5 years from now, that we will look back and be like, wow, this was an actual opportunity. Apple stock was down 25 to 30%. Amazon stock was down 50%. Tesla stock was down 40%, right? Microsoft stock was down 40%. Why weren't you buying everything? It's always very easy to look back and be like, dang, I should have done more. But it's very difficult during an uncertain time to be like, I want to do more. Because maybe you don't have the experience, maybe you don't have the confidence for it. And that's fine. It comes with time. All I'm saying is my only goal with these videos that I make during this very uncertain and oversold time is I don't need you guys to buy every stock and with all of your money. If you are really someone that wants to become a student of the market, even if you just buy one share of the most valuable company that you believe in right now, not because it's perfect timing, but I just want you to prove it to yourself. Let's say that you buy one share of Apple. Let me see a show of hands very quickly. If you buy one share of Apple, it's $138. Let's say Apple sells off to lows of $125 later. Oh no, you're down $10. You think you're going to care? No, because your position is so light that you don't care that you lost $10. But once the market actually recovers, and then Apple goes from 138 back to, because we all know Apple will eventually recover. Once it recovers that 31%, we'll be like, wow, at the surface level, you only made 31% of $138. But then it's all about scaling, right? So what if instead of buying one share, you would have bought 100 shares? What if instead of 100 shares, you would have bought 1,000 shares? What if instead of 1,000, you would have bought 10,000? You see? And then that's when it gets to be put into perspective of like how really wealthy people make a lot of money during recessions. And it's because they're all about short-term pain for long-term gain. And I think it's just a concept that I think that you need to be open to. And this is why, unlike other people maybe on the YouTube platform, I'm not here to convince you that you need to buy every stock with as much as possible. I know that it takes time to make money in this market, but I just want you to prove it to yourself. I want you to be able to look back and be like, wow, I could have made more money if I would have believed in myself. But at least now I know what's possible. So next time that there is a recession, you have nothing but time, right? Next time that there is a recession, you can approach it more confidently. And that's all I want. So even if you buy one share of one stock that you find to be the most valuable, I think what you will learn will be much more valuable than what you actually make. And that's what I wanted to leave you guys with. So one of the RGB mouse pads coming back. They're coming back soon. So we're doing a full restock on our shop TechBud site. You guys have been absolutely amazing showing support to our site. So for those that are unaware, we have this little store. It's called Shop TechBuds. It's the 4th link, I think, in the description. Right now we're doing a staycation giveaway. So we're going to be flying out 3 lucky winners, all expenses paid, to visit us here in Arizona and at the TechBuds HQ. So for every $1 you spend on the site, it equals 5 automatic entries towards our staycation giveaway. So if you buy a mouse pad, this will enter you automatically 150 times towards our giveaway. If you buy a shirt, again, 5 times every dollar spent. Aluminum art, 5 times every dollar spent. Periodic art, 5 times whatever it is that you spend, right? And then we have all of the flags. So we just did add new stuff to our apparel collection. So make sure that if you guys are a fan of oversized tees, we now have them available. They're one of my favorites. I like the oversized fit. So again, that's all available at shoptechbuds.com or the fourth link in the description. So especially if you have your trading set up, but you want a mouse pad, maybe you want some of these cool flags, or maybe you just want a Wall Street hoodie or a Wall Street shirt, they're all available here for you, and then you also get automatically entered towards our Staycation Giveaway. So if you have any questions, you guys can always direct message me via Discord. That's that first link in the description. And friendly reminder, if you want to join my Learn Plan Profit team and watch me trade live as soon as tomorrow, we're running our biggest sale. It's $150 off, and it's the second link in the description of this video, linked down below. So I appreciate you guys' time. I'll see you guys tomorrow at Market Open for our live trading session. And like always, let's make sure that we end the year on our green note. Take it easy, team. Ooh.